Euro USD price alert. Will the euro break the 1.1540 support? UOB analysis. Warning sign for the euro. Is the downward spiral just beginning? Imagine waking up to find the euro, EUR, has plummeted to unexpected lows against the US dollar, USD. For many investors, yesterday was that day, as the euro-USD pair staged a dramatic reversal, dropping from 1.1772 to 1.1584 in a matter of hours. But here's where it gets controversial. Was this sharp decline a one-off event, or is it the precursor to a more profound downward trend? According to UOB Group's FX analysts Kwek Liang and Peter Chia, the outsized drop might seem excessive at first glance. But there's a compelling case for the EUR to test the crucial 1.1540 to 1.1555 support zone before any stabilization can occur. The big question, will this support zone hold, or is it destined to break? Just a day ago, with the EUR at 1.1755, the momentum slightly favored an upward push, though the major resistance at 1.1795 seemed out of reach. However, the market had other plans. After peaking at 1.1772, the EUR took a nosedive to 1.1584. Despite the drastic drop appearing somewhat extreme, there's a window for the EUR to touch base with the 1.1540/1.1555 support zone before regaining its footing. Keep a watchful eye on resistance levels at 1.1630 and 1.1660. 1 to 3 weeks view, downward momentum gains strength. Reflecting on our last analysis, 23rd June, with the EUR at 1.1740, we anticipated further EUR strength, possibly aiming for 1.1795. Instead, after a brief ascent, the EUR experienced a sharp and abrupt reversal, closing at 1.1588, a substantial 1.29% decline, marking its second largest one-day fall this year. The key takeaway: the strong surge in downward momentum now suggests the EUR is likely to break through the 1.1540-1555 support zone. The next critical level to monitor is 1.1500. As long as the EUR remains below the 1.1700 strong resistance level, this downward momentum will persist. Investor beware. Forward-looking statements. The insights provided contain risks and uncertainties. Forward-looking statements. Market and instrument analysis is for information only. Do your research. Thoroughly investigate before making investment decisions. Risk disclosure. Investing in open markets involves significant risk, including potential total loss of principal and emotional distress. All associated risks, losses, and costs are your responsibility. The debate is open. Do you think the EUR will manage to hold above the 1.1540-1.1555 support zone, or is the downward trend inevitable? Share your thoughts and predictions in the comments below. Disclaimer. Subject authors. The views expressed are those of the authors and do not reflect the official policy or position of FX Street or its advertisers. The author has no position in the mentioned stocks and no business relationship with the companies mentioned, with compensation solely from FX Street for this article. FX Street and the author do not provide personalized recommendations and are not registered investment advisors. This article is not intended as investment advice. Dollar hits 1-month high against euro. What's behind the surge? Trade deal Fed analysis. The US dollar has surged to its highest point against the euro in a month, driven by renewed optimism surrounding recent trade agreements and anticipation of key interest rate decisions from major central banks. But here's where it gets controversial. While trade deals have fueled confidence, they have also sparked criticism from some European leaders, raising questions about the true impact on the Eurozone's economy. The euro is facing its first potential monthly decline against the dollar this year, a development that stands out after a challenging session in which it tumbled more than 1% in a single day, its sharpest drop since May. This weakness follows a series of significant trade arrangements announced by the US, including a landmark pact with the European Union. This agreement, touted by U.S. President Donald Trump as his largest yet, imposes a 15% import tariff on most EU goods and encourages a massive $600 billion influx of EU investments into the United States. To put it into perspective, this deal supersedes a recent $550 billion agreement with Japan, which also introduced a reciprocal 15% tariff. Meanwhile, talks between U.S. and Chinese officials concluded in Stockholm without major breakthroughs, but both parties agreed to extend a tariff ceasefire that had been in place for 90 days. This extension provides a temporary easing of trade tensions between the world's two largest economies, which many have feared might escalate further. From a market perspective, the greenback's strength is reflected not only against the euro, but also in its broader performance. The dollar index, which measures the currency's value against a basket of major currencies including the yen and euro, rose by 0.30% to reach 98.91, the highest since late June, and is poised to achieve its first monthly gain of the year. Mark Chandler, chief market strategist at Bannockburn Global Forex, noted that while the dollar's rally in July appears partly due to short covering, a technical rebound after a prior slump, it's still uncertain whether this signals a lasting trend or just a correction. He emphasized that the recent trade agreements, including the Japan and EU deals, along with the China tariff truce extension, have alleviated some downside risk, calming investors. However, not all reactions have been positive. On the European side, several leaders voiced strong concerns. German Chancellor Friedrich Merz warned, as markets digest these geopolitical shifts, eyes are turning toward the Federal Reserve's two-day policy meeting. Expectations lean toward the Fed holding interest rates steady on Wednesday. Yet, uncertainty lingers. Observers are watching for any dissent from Fed governors like Christopher Waller and Michelle Bowman. Earlier comments from Waller suggest he favors an interest rate cut, a move to stimulate growth in light of emerging economic risks. Bowman, who recently assumed the role of the Fed's banking overseer, has also expressed openness to lowering rates. On the other side of the globe, the Bank of Japan is similarly expected to maintain current interest rates, particularly following its recent trade agreement with the U.S. The dollar's performance against the Japanese yen showed a slight dip, whereas it strengthened modestly versus the Swiss franc. Looking ahead, Goldman Sachs analysts caution that the dollar's next major movement may stem less from trade uncertainties and more from changes in monetary policy. They noted that these recent trade deals and the apparent limited impact of tariffs on inflation expectations have lessened volatility in currency markets. So what does all this mean? Is the dollar's rise a sign of renewed U.S. economic strength, or just a temporary blip amid ongoing trade tensions? And with European leaders openly critical of these trade arrangements, can the euro truly stabilize anytime soon? These questions are sure to stir debate, and we invite you to share your perspectives. Do you think the new trade deals are beneficial or harmful in the long run? How will central banks' upcoming decisions shape the global currency landscape? Join the conversation and let us know your thoughts. Euro falls as tariff concerns rise. What you need to know. The euro has experienced its most significant decline in 6 weeks, highlighting the stark reality of ongoing tariffs. On July 28, 2025, at 6:16 a.m. EDT, the currency faced a notable drop, which was later updated at 11:33 a.m. EDT. This decline comes after a brief period of optimism regarding a trade agreement between the European Union and the United States. However, this optimism quickly faded as concerns about the economic repercussions of high tariff rates took center stage. During the morning session in New York on Monday, the euro fell by over 1%, reaching a low of $1.1618. This marked the largest decrease since May 12, making the euro the weakest currency among major global currencies. In contrast, the dollar has shown strength, rising for the third consecutive day against all currencies in the Group of 10. But here's where it gets controversial. Many analysts are debating whether the current tariff rates will have a long-term impact on the euro's stability. Could this be a temporary setback, or are we witnessing a more profound shift in the currency's value? What do you think? Share your thoughts in the comments below.